The evil, of course, these days could be inflation. It could be overvalued stocks, any exogenous development that could derail the economy. On that, I want to bring in our market pro from Mayflower advisor, Larry Glazer. Oh, also, I've got Kingsview Wealth Management, Scott Martin, with me as well. Gentlemen, let me start with you, Larry. I know you've been concerned. I was reading some of the work you've done, even going back to 2018. So you've been concerned about inflation. But is it so pervasive, right? Do you sense that it's going to be so pervasive and enduring right now that the Fed will indeed be forced to derail the stock market?
You know, Charles, it's a really good point. And potentially the biggest risk to the stock market right now isn't the economy. It's not the reopening. It's not even COVID. It may be Washington itself. It may be a Fed misstep. It could be higher taxes. Any of those things could potentially derail this. But I think more importantly, let's play a little game here, shall we? And we'll see how many times Fed talking head officials this week used the word transitory to describe the inflation that we're all experiencing on Main Street every day. Charles, the proof is on the grill for Memorial Day. Look, let's see what the price of chicken wings look like, right? That is, if you can get chicken wings. Let's see what the price of hamburger looks like. That is, maybe it's going to be so expensive, we're just going to eat the helper. No one's going to take road trips if gas prices go up. You're not going to rebuild your deck or your fence if lumber prices go up. So all those things are a risk potentially. And we learn early on is you do not fight the Fed. If the Fed says there's no inflation, it's going to be good for the reopening. It's going to be good for reflation. But you got to be in companies. They have enough margin expansion. They can absorb that, pass it through cyclicals, industrials, material stocks, and certain technology names that benefit from all the good things on the technology side that are happening today in this acceleration of innovation.
Well, if there are no chicken wings, I'm going to be out down there protesting myself. Scott, when it comes to transitory, if we play the game, I've got the over, whatever the number is. What's your assessment? Because, again, the Fed, though, they're a united front. They're staying firm. They're saying there's no way we're going to deviate no matter what.
Yeah, I don't know if they have a over-under yet, Charles, on that, because as Larry pointed out, the Fed is just going to keep using that word over and over again until they're right, because I actually agree with them. I mean, I think if the economies globally reopen, as we hope they're going to, you're going to see that resource utilization, easy for me to say. You're going to see that sourcing of minerals and elements and things like that that are going into building things and making things again start to happen. Global supply chain should come back online and lessen the pressure that we're seeing in price. So I think the one concern, though, Charles, is what the D.C. administration is doing to our good old greenback. That's the U.S. dollar if you're playing at home, because this endless printing of money, the pork bills that are out there to buy votes and buy favor across America are the things that are killing the greenback, which is actually pushing up prices more than anything.
Yeah, DXY, folks at home, put that on your watch list. If it goes under 88, could be trouble for your shopping bill, although multinationals might like it. You know, I'm going to get back to what you were saying, though, Larry. I understand, listen, we all, we go shopping, we see what the prices are. But how do you explain more recently this sort of relative calm in the market? The 10-year bond yield keeps drifting. The VIX keeps going down. Of course, that's the fear index. Other indicators in the market seem to have become sanguine.
That's right. No, it is a really good point, because we see this inflation out there that the market isn't sort of believing it. And it's interesting because it would be easy for me to say to you, hey, the public isn't buying what the Fed's selling. Actually, right now, the public is buying it. If the Fed tells them there's no inflation, people are starting to absorb that. The market's starting to absorb it. More importantly, China, the other big central bank, we have to keep our eyes laser focused on. They're jawboning the price of commodities. They want to bring the price of commodities down for their benefit. I still think you want to be in some of these producers of these materials, these raw materials, energy, industrials, the companies that will benefit from this reopening. There's still going to be an infrastructure plan. They're going to benefit from that. But there's no doubt, look, technology is getting a reprieve here because inflation fears went on hold yesterday. That's a good thing for a lot of the really high-quality tech names that we own in our portfolios. It's good for the market as a whole. It does stabilize things. The lower VIX might be somewhat misleading, Charles. It may be sending us a false flag signal right now.
I got you. Larry, it's great seeing you, my friend. We'll talk to you again soon. Scott, if you can't, stay right there, because I want to bring in Bull Tick Capital Markets, Captain Rooney Vera. And I want to switch course a little bit here. Florida Governor Ron DeSantis just signed a new law imposing fines on social media companies that permanently bar political candidates. I know that's your state. You're Floridian, Catherine, and that's obviously these stocks we watch a lot. Just your thoughts.
Yeah, great thing. It's fantastic. Great state of Florida and wonderful governor. Look, what happened to Section 230, right? Big tech has had it both ways. They've been both a publisher and a platform. A publisher, if your audience remember, can censor and be sued. But a platform can't censor but can't be sued. And big tech has had it both ways for an inordinate amount of time. So imagine former President Trump that lives here in Florida, what his next move is going to be after this.
You know, I want to stay on social media and how this new woke era, coupled with this the appeasement of overseas markets and governments, creating really serious turmoil. In fact, I'm going to bring Scott Martin back on this. So John Cena fans are outraged. He was forced to apologize in Mandarin, by the way, for calling Taiwan a country. This as he was promoting the latest Fast and Furious installment. So Scott, first, just let me get your thoughts on that. I'm a huge John Cena fan. I hated to see that.
I did too. And, you know, it's always about intent, I think, with kind of this woke culture and some of the things that are said these days, Charles, that need to be apologized for or not. I mean, look, I don't think John Cena meant anything bad when he talked about Taiwan being the first country that could see Fast and Furious 9. I mean, and everybody got super upset, and then he had to apologize, like you mentioned, in Mandarin. I mean, I think with the culture as such these days, you have to look at intent. It's not just about what somebody says inadvertently. It's their intent, and I don't think John Cena meant anything bad about it, but let's face it. Let's just say he didn't apologize right away because he jumped on it pretty fast. Credit to him. He probably would have been canceled. We probably would have never heard from him again based on how things are going these days.
Yeah. Well, you know, and also, let's be honest. I mean, this is about being canceled in China, which seems to have more sway over corporate America, woke corporate America, than certainly conservatives in America. The movie did $160 million in the first weekend, $135 million out of China. And also, let me add Mark Ruffalo into this, right? Because he also had to apologize. Now, this is really tough. I mean, saying Israel was committing genocide against Palestinians. Catherine, all of this, you know, is clearly, you know, he was forced at the direction of Disney. They own the Avengers franchise. That's where he's making a lot of money. But it seems to me, if you broaden this out, it's another reason why these large corporations and their proxies, whether it's actors or anybody else, should just simply stay out of political commentary. Your thoughts?
It's beyond me why they think it's to their benefit. They should stick with the bottom line rather than alienating and insulting their consumer base. Woke ideology, Charles, is popular with the elites, but it's not popular with the common American. So I think that we need to look at what happened with the deplorables, how that worked out for Hillary, and really focus on the bottom line here, guys.
Well, you always focus on the bottom line, so let's shift gears for a moment. I want your thoughts on this market. It's meandering, but I'm thinking, and you know, it's going to take some time to know, that we might have had an inflection point last week. I feel like the bias has kind of shifted back to the upside, and I think maybe for now the worst could be over. I know you're not convinced. Where do you see this market?
Well, we have an inflation that's both transitory and structural. Your previous guests were talking about the transitory nature of it. It is, in fact. And by July, the base effects from last year's horrific year are going to roll off. So that's going to favor tech in the very near term. In 2022, though, Charles, I'm far more cautious. I think the combination of a doubling of long-term capital gains, higher corporate taxes, higher marginal income taxes on the rich are going to really favor, and I think that combined with more structural inflation are going to favor the less sexy sectors, such as utilities, such as energy, such as telecom, high dividend names that I think these tax increases, especially on long-term capital gains, Charles, are going to be the great equalizer between what has historically been beneficial for tech, low capital gains tax brackets, and higher dividend sectors such as utilities and telecom and energy, which I think are going to be more defensive positions for going into 2022.
All right, so folks, enjoy the run this year while you can, because if utilities are the #1 sector, maybe the rest of your portfolio ain't looking so good. Catherine, Scott, always appreciate it. Thank you both very much.
Thank you.
So questions are